If you had just one word to describe the US real estate market, what would it be? Well, my friends, the real estate market today is stuck. Despite deliberate interest rate cuts, transactions they have not picked up as expected. The Wall Street Journal even noted that the anticipated real estate turnaround ended before it started. But here's the thing, as a real estate investor, you can't afford to wait. While others are waiting for the perfect moment, savvy investors know that time in the market always beats timing the market. And this video is here to help you take that crucial first step to get into the real estate market right now and let time start working for you instead of against you. The sooner you act, the sooner you'll be on your way to building lasting wealth. So my friends, let's dive in. First off, my name is Ryan D. I've been in the real estate market for well over 15 years now, and I've seen the highs and I've seen the lows. I've seen the good and I've seen the bad, but unequivocally what I can tell you is time in the market has literally made me wealthy. So in this video, I'm going to show you why waiting is the worst thing that you can do and how to leverage the current market to create real long-term wealth. So the real estate market, it's kind of like an iceberg. 90% of its opportunities lie beneath the surface, unseen to the untrained eye. Most people are fixated on the 10%, what sits above the waterline. They're talking about interest rates, property prices, and waiting for the perfect conditions. But here's the secret. The wealthiest investors focus on below the surface, where the real potential lies. Above the surface, oh my gosh, it is noisy. There's pundits, there's headlines, and fear dominates the conversation. But below, my friends, it's quiet, it's tranquil, and that's where the fortunes are made. So let's dive in. You see what I did there? Dive in underneath the surface, iceberg analogy. And so let's dive in and go beneath the surface to uncover the real wealth building opportunities. Okay, so in this video, here's what we're gonna cover. The secret to real estate investing, how leverage supercharges a savvy investor's returns, and why leverage is the key to making time work for you. And third, why holding single family rentals is the ultimate wealth building strategy. So first off, let's talk about the secret to real estate investing. And my friends, it's no secret at all. Underneath the surface, we know that the secret to real estate investing is inflation. Now listen, that doesn't sound like a secret. Most people actually dread inflation. To them, it means rising gas prices, higher utility bills, and more expensive groceries. But for savvy investors like you and I, inflation is a tool. It's a wealth maker, a wealth creator. Inflation will actually make you wealthy when you invest appropriately. And here's why. Many people believe that inflation simply means the dollar loses value over time, thinking that it's a natural part of the economy, kind of like the changing seasons. And it's really easy to see why. Most of us, we were born into a world where inflation has been a constant presence, steadily eating away at our purchasing power. And because we were born into this world, we believe that's just the way the world is. But before we dive into real estate, it's critical to understand what inflation really is, because when you do, my friends, you'll see how it can make you wealthy. Investopedia says inflation is a gradual loss of purchasing power reflected in a broad rise in prices for goods and services over time. Even if we go to the Federal Reserve, the one who creates the inflation that we're experiencing, they tell us that inflation is a general increase in the overall price level of goods and services in the economy. Now, while these definitions are technically accurate, they only tell you half of the story. They describe the effects of inflation, not the cause. And this single misunderstanding leaves most people believing that inflation is just an unavoidable fact of life, a natural occurring phenomenon in a modern day market. This could not be further from the truth. To truly understand inflation and use it to your advantage, you need to dig deeper. We need to go below the surface to where it's quiet and the truth resides. And we need to understand both sides of the equation, cause and effect. As a Nobel laureate economist, Milton Friedman stated, inflation is always and everywhere a monetary phenomenon, in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in the quantity of output. In simple terms, my friends, inflation is caused by printing too much money. Now, why would all of the other places remove this portion, the root cause of inflation, from the definition? Listen, when more dollars are chasing the same amounts of goods and services, prices are going to rise. And the cause of inflation is the printing of dollars, not necessarily the natural occurrence of just prices going up. So now that we understand the cause of inflation, and we know that the cause of inflation is likely going to lead to more inflation, This is how a savvy investor is going to use inflation to their advantage. Here's the key. If inflation means that today's dollar is more valuable than tomorrow's dollar, how can we turn that knowledge into wealth? Step number one is recognizing the cause and the consequences of inflation. More money in circulation chasing high in-demand products is going to equal higher prices. Second, the purchasing power of the dollar decreases over time. Now that we understand the causes and the consequences of inflation, this brings us to step number two, understanding why real estate is the perfect inflation hedge. First off, everyone needs a place to live, which keeps demand for real estate at a constant high. At the same time, the building of new homes requires significant labor and raw materials, keeping supply relatively limited. This imbalance creates a constant upward pressure on prices, making real estate a profitable asset class. Number two, we have the ability to use leverage in real estate. Leverage is one of only a few asset classes where you can use bank financing to acquire an appreciating asset. The other two are businesses or whole life insurance. These are the only three assets that banks will consistently lend on: real estate, businesses, and whole life cash value insurance. By using a 30-year mortgage, you can acquire property with a fixed debt ratio over 30 years while benefiting from rising home values and rising rental income. Let's break this down why real estate investors win with inflation. Inflation works for you in two powerful ways when you invest in real estate. Number one, property values rise. Real estate appreciates over time, and it's not just that real estate is getting more valuable, it means that real estate is a constantly in-demand asset, and it takes more and more deflated dollars to buy the same real estate. This oftentimes is outpacing inflation. For instance, single-family rentals have maintained a compound annual growth rate of 5.4% over the last 50 years. You can see it right here in this chart going up, and you can see what happened in 2020. It spiked. Now it did come back down, but it's leveled off again. But what you can really see is over the last 20 years, not only has it been 5.4%, in many locations it's been north of 10%. Now, this is inflation actively growing your wealth. Now, simultaneously, over the last 15 years, the US has fallen massively behind on building enough quality single-family homes, leaving a shortfall of nearly 20 million homes. You can see it right here in this graph of homes built in the millions in the US. The main thing to focus on is this bulk right here. From 1950 all the way to 2010, every single year there were 20 million plus new single-family homes added to the US economy. That took a massive decline after 2008, and it's never picked back up. Today there is a major shortfall in the supply on an asset class that is in high demand. And this imbalance between supply and demand continues to drive property values higher year after year. With each year, it becomes more expensive to purchase the same type of asset, making real estate an even more valuable investment right now. Next, we're going to talk about rental income increases and how they rise with inflation. It's not just property values that rise, rents are climbing too. As inflation drives up the cost of living, rents steadily increase, providing investors with a growing incoming stream of cash flow. Over the last 20 years, average rents have risen significantly. For example, the average rent in the US has increased from $1,185 in 2020 to $1,448 in 2023. This reflects a 22.2% increase in just 3 years. And what this means is that real estate investors are not only building equity as property values appreciate, but they're also earning more passive income as rents rise, all fueled by inflation. When you take all of this and combine it with the idea of supply and demand, things start to get crazy. By combining supply and demand dynamics with the power of leverage, real estate allows you to profit from inflation instead of falling victim to it. With real estate, you're turning inflation, a challenge for most people, into a wealth-building engine. Whether through rising property values or increasing rental income, the opportunity is undeniable. So the secret I want you to take away from this is inflation not only grows the value of your property, but it also increases your rental income, compounding your returns over time. Here's where it gets crazy with the concept of leverage. Now listen, leverage is a tool that is really only available to real estate investors, and as I mentioned previously, you can use leverage from a bank on high cash value life insurance as well as a business. But leverage is the secret. And I truly believe that really the only difference between the wealthy and everyone else is they understand leverage. And they use leverage more consistently, more effectively, and more profitably than the average American. Most people believe that leverage is bad. Dave Ramsey will bonk you on the head and say you're dumb if you're using leverage. Now to be fair, most people do use leverage inappropriately. They use it as debt to buy some form of a liability that requires them to trade their future time to pay back that liability. But as real estate investors, below the surface of this iceberg, we're using leverage to acquire an asset that other people are going to pay off on our behalf. This is smart leverage, and this is the key to winning in the game of money. Let's break it down with a simple example. Suppose you buy a $200,000 house and pay cash for it. If over the coming year the property value increases by 5%, remember, because of inflation, your return is a straightforward 5%, right? But let's say you only put 20% down on that property, meaning you put down $40,000 of your own money and you finance the rest. The property, well, it still appreciates to $210,000. That's the same in both examples, but now your return jumps from the 5% when you paid cash to 25% because you used far less of your own money to acquire the same property. Let that sink in for a minute, my friends. Your return jumps from 5 to 25%, and the only difference is leverage. That's the power of leverage. It multiplies your wealth building potential far greater than anything else can. All of this is due to the power of inflation and letting time work for us to make us wealthy. Meanwhile, remember, you took out the mortgage with a fixed rate mortgage, meaning we're going to be paying the bank back with devalued dollars. Inflation is quietly working in our favor, but against the bank, it's actually making the bank less money the longer we hold the mortgage. This is leverage in action. You're using the bank money, which, let's be honest, is essentially fake money, to acquire real appreciating assets. Let me say this again. The secret below the iceberg surface that real savvy investors know is the objective with the game of money is to convert fake money into real assets. So if that's true, let's update the way we think about assets. Now, Robert Kiyosaki famously said, an asset is anything that puts money in your pocket. Now, I love this. This takes us in a step in the right direction. But since we're diving deep below the iceberg here, let's refine this definition for a real savvy investor. An asset is anything that the bank will allow as collateral on a loan that generates enough income to, number one, carry the loan's carrying cost, and number two, produce a profit. This, my friends, is the updated definition of an asset in an inflationary world. That's why debt is such a game changer. You can use leverage to buy an asset that appreciates with inflation, and then also use the profit that that asset generates to pay off the debt, putting a surplus profit in your pockets. And to sprinkle on even a little bit more goodness in this, when you use it for real estate, all of your profit, if done right, is 100% tax-free. You're literally kicking the tax man out of your financial game plan. So my friends, leverage and inflation are a real estate investor's two allies. While inflation is eroding the value of the dollar that you owe to the bank, it's simultaneously growing the value of your property and your rental income. With leverage, you're not just building wealth, you're accelerating it. Listen, I want you to understand this. There is literally nothing holding you back when you're willing to step into the game of leverage. The bank is printing new money every single day, and they're looking for someone who can go out and find a real asset to use as collateral to gain access to that fake money. My friends, let this be you. Buy real estate now and let time work for you. This is how savvy investors win big in the game of real estate. A savvy investor never looks good today, they look good in hindsight. In fact, the properties that I own today that have made me millions of dollars, when I bought them, everyone was pointing at me and saying, what are you doing? You should be maxing out your 401k. But those properties, holding them for the last decade plus, have made me millions of dollars. Okay, so this brings me to the final section of this YouTube video, which is what type of real estate should you buy? Now, I've kind of alluded to it up to this point, but now that we're this far below the surface of the real estate iceberg, let me tell you what you should focus on next. If you want to achieve financial freedom and take full advantage of supply and demand, leverage, and inflation, here's your mission. Your mission, should you choose to accept it, is to buy and hold between 10 to 20 single-family homes. That's it. This portfolio will become the foundation of your wealth creation, and here's the best part. Just about anyone can achieve financial freedom using this strategy. Now, you might be asking yourself, why single-family homes? Why is this crazy guy Ryan on the Wealth Outside of Wall Street channel talking about a simple, boring single-family home? Well, I want you to consider this, my friends. A single-family home is the bread and the butter of real estate investing for a few different reasons. Number one, they have consistent appreciation. Remember the supply and demand. They're not building enough single-family homes right now, which means the demand is crazy high. This gives you the ability to own an asset that is going to inevitably rise over the next decade plus. Number two, they produce stable cash flow because of the demand, because people want to live in a home. When they want to move out of the apartment complex or when they want to downsize, everyone is looking for a good 3-bedroom, 2-bath single-family home in a wonderful location. Number three, single-family homes give you, bar none, the best ability to use leverage. Banks love financing single-family homes, making it easy to scale your portfolio. And here's a little secret for you. Banks will allow you to take advantage of Fannie Mae and Freddie Mac, the most profitable form of lending, up to 20 single-family homes between a married couple. That means everything you need is sitting there on the sidelines waiting for you to take advantage of the opportunities that are already available to you. Number four, single-family homes give you virtually the lowest risk. You earn money in multiple ways in a single-family home, which allows you to earn a higher return, but take far less risk doing so. Number 5, single family homes are one of the easiest asset classes to do turnkey, meaning you can buy into a system that requires virtually none of your time and get the upside benefit of owning real estate. So if you're serious about achieving financial freedom, single family rentals are the foundation that, my friends, you need to build on. So my friends, to end this video out, I want you to come look over my shoulders, because what I'm gonna do is I'm gonna break down for you the profit centers of owning just one single family home over the next 10-year period of time. My friends, the numbers are going to astound you, so come take a look. Okay, my friends, this calculator is the calculator that we use inside of our community to evaluate real estate. The first tab on this calculator helps us buy the right property. I'm not gonna spend any time on this, but what I did is I uploaded the same metrics of the property that we were just looking at on the video. So a $200,000 acquisition price rented out for $1,800 a month. I've also factored in 40% of our collected rents is inevitably over a period of time going to go towards vacancy and make ready. So this makes sure that we're having a realistic view of what our known expenses are, mortgage, property taxes, and insurance, and our expected costs between vacancy and repairs to look at what our real profitability is. So let's look at the 10-year analysis. Now I'm gonna break this down into 3 separate sections here. And the first section you can look at is year number 1 of just what's going on with our rent. In year 1, if we're raising our rent steadily over time, then over 1 year period of time, we should be able to renew our lease at a little bit more than $1,800. So $1,850 would be our rent. Now our operating expenses are gonna be $742. Now we factored in our operating costs, leaving us with about $100 of monthly cash flow. Now, how on earth can we become wealthy with just $100 of cash flow? This is why most people will look at real estate right now and say, I'm gonna wait for a better time. Now, over time, what's happening, remember, is we have a fixed, steady mortgage, meaning our biggest operating expense is a fixed cost. And over time, as we're slowly raising our rents, look what's happening. Our monthly income, or let's look at it from an annual basis. Our annual income is going up every single year. $1,200 of annual income in year 1, $16 in year 2, $2,000 in year 3, $24 in year 4. And you'll notice our cash on cash return is also increasing every single year until we get to the 10th year. In the 10th year, we have a 12% cash on cash return, and we're collecting $5,300 a year on this single property. Why? Because we're slowly raising the rents over time, and our fixed cost of the mortgage is staying a fixed cost. Okay, now that's just one profit center. So let's look down below our cash flow analysis and let's look at the multiple ways that we're making money in real estate and the overall return we're getting when we're using leverage. Number 1, we talked about our cash on cash return. We're collecting $1,200 of rent over the course of 1 year, and based on the money we put in, that's a 2.7% rate of return. Because our tenant is paying down our mortgage for us, this is forcing appreciation into the game. I want you to consider this. In real estate, there is such a thing as a guaranteed return, and it's called amortization. Your tenant is paying down your mortgage, forcing equity into your property, which in 1 year is equivalent to a 4% return. Because we're not paying any taxes on the money that we're collecting, that's equivalent to an 8%, or that's equivalent to about a 1% return on tax savings. And because we have the property and we're holding it, and because we're holding the property over 1 year, it's going up $11,000 in value, equivalent to a 24% return. Now, my friends, here's where it gets crazy. If we stack these up, that means in this boring single family home, you're earning a 32% rate of return every single year. Now, my friends, remember, inflation is working for you. So look at year 2. You're earning a 35% return, 38% return in year 3, 41% in year 4, and let's go all the way out to year 10, where you're earning a 63% rate of return in a single year. In year 10, you're collecting $5,000 of cash flow, you have $3,200 of forced appreciation via amortization, you have $1,600 essentially in tax savings, and you have $17,000 in appreciation market value. And my friends, last but not least, let's look down here at the very bottom where we're looking at our balance sheet. In year 1, if we buy the property for $200,000 and we put a down payment, we're gonna owe about $158,000 on that property, meaning there's about $52,000 of equity in that property. Not much to consider there, but every single year, 2 things are happening. The property's going up in value because of inflation, and the tenant's paying down our mortgage for us. There are 2 returns happening in this, and so by year 3, you have $80,000 of equity. By year 6, you have $129,000 of equity, and by year 10, you have $207,000 of equity, which is equivalent, my friends, to a 375% return based on the money that you originally put into the down payment of the property. Now, I want you to consider this. You could go back to the bank and say, hey bank, I want you to give me a cash out refi, meaning I want you to revalue my mortgage and send me a check for $200,000. They would do that tomorrow, and guess what? That check would be 100% tax-free. So my friends, there you have it. With just one property, you're already seeing the multiple wealth building opportunities. Now imagine multiplying that by 10 or 20. That's the power of single family rentals. Now, if you want access to this calculator, if you want to start buying real estate like I'm talking about buying real estate, drop a comment for me below. Let me know your financial freedom goals, and I'll send you an opportunity to start using this calculator as well as all of the other tools that we give our empire builders to start building their wealth using real estate as the foundation. I want you to know this, my friends, it is achievable for you. Financial freedom isn't just reserved for the wealthy or for the lucky. It's achievable for anyone willing to follow this proven strategy. Start small by buying one property, then another, and over time, you're going to build a portfolio that not only generates passive income, but also grows in value, setting you up for a lifetime of financial security. If you're ready to take control over your financial future, don't wait. The longer that you sit on the sidelines, the harder it's going to be to start. Your journey to financial freedom begins right now. So smash that like button, drop me a comment, and I'll see you on the next video.